So I read your report, lots of great data there. From the trends that you are seeing, if there is one key message that you would give Canadians who are looking out for their financial well-being, what would you say to them?
Well, it's a really uncertain period that we're going through due to the pandemic. So my one piece of advice would be really careful or really aware in terms of your own financial situation right now, and look to the future in terms of what could happen and what could be coming around the corner, and just thinking about, can you really afford to kind of make your payments if things do start to change for you? Because individual circumstances are always different.
What is the latest growth trend behind HELOCs? Are they using it towards retirement or funding a lifestyle? What is it?
So it is difficult for us to really identify exactly how they are used, because unfortunately we don't see that information. We know things like renovations have been up in 2020 and in 2021. Being at home is so much more important just due to the pandemic, really, and people aren't going out and doing things they used to do. So we definitely expect some of that is really linked to kind of investment in the home, whether it's outside or inside.
Okay. So for those who may not understand what HELOC is, can you explain how it works and what homeowners need to be aware of?
Absolutely. So there are different variations you can get, but normally how it works is you have your mortgage, and linked to your property value, there will be an equity level to that, depending on how much your mortgage is in relation to the home price, kind of what your property is worth. And what you can do is you can have a line of credit that is linked to that equity within your property. So you can kind of draw down against it. You have a limit, a bit similar to a credit card, but it tends to be much higher. And then you can kind of use that equity almost in there as an ongoing basis as a credit mechanism. So they do tend to be higher balances, higher limits, tens of thousands of dollars, just because they are linked to that equity element in your home.
Okay, so is the concern then that they're, I think, linked to variable rates and that we could see rates go up? Is that the big concern?
Yeah, absolutely. I mean, it's been a really long period now of low interest rates. And again, that's partly due to the impact of the pandemic. And what you can find is that, when those interest rates could go back up again, and they will do at some point, those payment amounts can increase by quite a lot, because again, they're very high balance and typically variable rate. And that is kind of the area of concern, is just, are consumers thinking about that, and kind of when that might happen and what the impact might be to them.
Rebecca, what happens if they miss a payment then? Or say the home value goes down?
So if the home value goes down significantly, I mean, that's quite unlikely in terms of some of the forecasts. Yeah. You can end up with quite a challenging situation where you have things like negative equity, but we don't really foresee that coming. If you miss a payment, it's a bit like any other type of credit. If you miss a payment, obviously there'll be kind of maybe fees associated with that. There obviously will be additional interest. But on your credit file, we will see that as a missed payment, and that can start to impact things like your credit score and your ability to get future credit.
What's going on with other types of debt, like credit cards, line of credit? What sort of trends are you seeing there?
So if we go back to pre-pandemic levels, we obviously saw credit card balances were very high, unsecured lines of credit were very high. During 2020, those really reduced. We saw reduced spending, again, because consumers potentially weren't going out and kind of spend on the same things they used to, like vacations and things like that. But we also saw much higher payment rates. So there were some consumers that potentially ended up in quite a good situation as a result of the pandemic. They weren't having to commute. They maybe were kind of receiving government support and things like that. And we saw a lot of consumers leveraging that opportunity to pay down some of their debt. So we have seen real lows in terms of credit cards. What we are starting to see in Q2 was that that's starting to shift a little bit. So we're seeing spend pick back up again. We're seeing payments reduce a little bit, and we're seeing balances start to creep back up again. So it's still relatively slow, but it's definitely kind of starting on the upward direction as opposed to this downward trend that we've been seeing.
Okay, we're going to have to leave it there, but great insight. We'd love to have you back.
Thank you so much.
That was Rebecca Oakes of Equifax Canada. We're going to take a quick break, but when we do come back, we're going to continue this conversation on using equity in homes when it does and doesn't make sense. Stay with us.